This is Scott from Scalpel Senior Trader, and this is the SI Indicator Setups and Educational course, the second setup called the Stop and Hold. Please take a minute to read this disclaimer. Alright, so the Stop and Hold is actually the opposite of a Dumb and Dumber that we previously covered. The Stop and Hold is a setup. The Stop and Hold setup is a threshold stop run event that is the usual retail trader puke but doesn't reject the area and continues in the same direction. The methodology behind the Stop and Hold is that after the stop runs trigger, bigger players jump on the area and continue to take initiative trades in the same direction as the stop run. The additional dynamic is traders that just got run over continue the momentum higher as they puke themselves. This setup has a high propensity of retesting the zone before continuing to move in the same direction of the stop run. So here's some examples here. This was ES not too long ago actually, and you can see here you get 1100 stop runs there. Switch colors here with the pen. And this did the usual. So again, this has a much higher propensity to come back to the volume event than go. So you can see here, I don't know the reason for that, but it does. Again, a lot of traders get run over on the stop run, so you can imagine, traders sitting in the order book and sitting on the offer side, and then the buy subs fire off and run them over. Well, they're short, and then as the market moves away, they start to panic a little bit. The bigger players, if they have bullets left, a lot of times can push this market back into the area to cover their trade, which leads to the next wave up. That's always the theory or the tendency behind the retest failure. But the one reason why this continues is traders that get run over, like we talked about in the opening segment, and then the big money usually comes in behind it as well. So you can see that in the buying bubbles, where these are obviously market orders, but somebody's lifting these offers after the stop run came in. Another thing you can look at too is relative volume. If you see high relative volume, I use the 5-minute relative volume in a Sierra chart. We're not going to go over that in this course, but you can look at the relative volume, and if you see, you want to take in consideration the size of the order, but a lot of times the size of the stop run is not enough to make relative volume, spiking on the Sierra charts for that 5-minute period. So if you're seeing high relative volume, it has a much higher chance of holding the area and continuing, just because the big money's playing. And then you have the dynamic of guys getting run over as well. So that's the theory behind the stop and hold. And again, this was it looked like it was probably close to an ATR retested. And so once, like we talked about with the Dumb and Dumber, and we'll talk about with all these setups, you can trade these. This is the science. The art is how you trade these. You can trade the minute you see the stop run. As soon as you see a blue bubble, you can get in, put your stop on the other side of there. So like you can see in this instance, you may have been stopped out if you put it too close. So the way I trade, again, is waiting for an ATR, waiting for a retest, and when it gets back outside that ATR, that's where I'll take that trade, and then I'll put my stop in an ATR on the other side. That's discussed in another part of the course. But if you're trying to cut your risk, have a better risk reward, then you can be a little more aggressive, getting in right when it breaks the zone. Stop goes right below it. But if you get stopped out like you would have here, you got to be ready to get back in and give it at least another try. So that is your, depending on how you like to trade, you may, a lot of traders hate risking a lot. But I mean, I used to trade this way, like I said in the last section, and I just got stopped out too many times, and I figured out the best way is to wait for the ATR and then to move away. So either way, these have a high propensity of getting the ATR away, retesting, and then going. And you can see this was what was this? This is a almost 25 point trade here before it started to turn around, and you can see at the close there's some other stuff here, but that's that example. Here is NASDAQ, same type of pattern. You had 206 here. Actually, what I could have done here, And, you have to use a little judgment here. You definitely want to be drawing the zone for that's hitting threshold, but if you get back-to-back stop runs, you can incorporate this as one big zone, because we're just trying to find areas that traders are getting run over or trapped, right? So in this instance, whoever was in the offer section of the order book, then they got run over, and they're in trouble. So you want to try to incorporate as much as you can. I don't put in little blips, but if this looks like this was close to maybe 150. I don't have the actual amount here, but you can definitely, even if it's not 150, if it's 100, you can put these two together and make it 300 and make this one big zone. Either way, this, did the pattern move away? This looks like it definitely would have been an ATR. This is about 40 points, and it came back, retested, and then launched. So once again, you can get in the minute it breaks above there. Again, if you were incorporating both of these, I would have waited for something like this, and you would have taken some heat, but it never did get back on the other side of the zone. Me personally, I will wait for the ATR retest failure. I'll get in once it gets an ATR above there, whatever price that was, and then my stop goes below there. But this just shows another pattern of this stop run. Big money comes behind it. You got to remember too, the traders that got run over, they're not feeling too hot, right? So this could continue to go and not retest, but for some reason the stop and hold retests more than any other setup that I've watched. So, but these guys that get run over, and you can see these swipes here too, they're not feeling very good, and when it comes back, they're peeling out, and that leaves the next wave up. So you got that dynamic, and then you have the big money dynamic that comes in after the stop run. So again, how you can judge if it's a stop and hold or not, the best way is to see if it can get the ATR above the zone, right? Because a lot of times, you don't really know, is this going to be a dumb and dumber or a stop and hold? It could just pop a little bit below and then die. So I recommend waiting for the full ATR to determine if this is a stop and hold, and then you wait for the retest. There are going to be times it doesn't retest, like I said, and you just got to be okay with that. But that's the best way to trade these, in my opinion. Nasdaq again here. This had made a high, and then you had sell stops coming back down in this area, and here you go. Here's I don't know if this was the exact ATR. It was only about 15 points, but it did retest here and then fail. It did come close again here again after moving. This was definitely an ATR, and then continued lower. So you can see it's just the same patterns over and over. And then, so this was an example of two different zones where you can draw. This was gold, where the gold's 150 is your threshold, so you could have drawn that first one, the yellow zone, and traded potentially off of that one, and then you had the white zone. This is an older chart. This was actually 2022. What I would do nowadays, just from seeing so many of these, like I just showed you in a couple examples before, or a couple examples ago, was just put these all together, make it 400, and here's your pattern, here's the move away, here's your retest, here's your failure type of pattern. So, it's just, you can see it doesn't matter what market you're trading, it has the same types of patterns where guys get run over, moves away, guys are holding their breath, comes back, makes it move up, big money comes in behind it and pushes it higher. Next example this is ES once again. You had the sell stops fire off here. This, I don't have it labeled here, but it was over 500, as you can see here on the scale. This one went quite a ways away actually before retesting and then failing. But if you wanted to be aggressive here, you see this fire off. You're in right when this gets below. You see your bubbles. Put your stop just above. You can probably survive that little blip above there. But in this instance, you were in right away and you got the move right away. So this would have been a good 12 points. Where, depending on what you look at, we don't talk about areas you get out of these trades because that's more of a subjective thing. Where, you could just wait. The rule of thumb that you can use is you're going to stay if you're not looking at anything else, or you think these are the most important things out there, and they are, in my opinion. Then you can just hold trades many times, at least a portion, until you get an opposing volume event the other way, right? But either way. I do pay myself as I'm right if I have multiple positions on, or multiple orders on, I should say, and I would get out, if one came down here and there was like VWAP or something else that, if you're in my trade room, you hear this stuff all the time. I'll peel out of one, you take the heat, but this never violated this zone. So you got to be able to take the seed and make them prove they can get it above this zone for you to stop out of your trade. Is highly recommended. I would not be trailing stops, in the middle of nowhere where nothing's really going on here. Make them get back above this high volume event. Next example is Nasdaq again. This is we actually had back-to-back here too. I should have put these together for this example, but same thing. Moves away, comes back, retest. I did retest this first one, and then move away. But another example. So this example, you can see you would have been stopped out maybe a couple different times. So if you got long the minute that broke above here, so even if you drew these two together, the minute it broke above there, you would get long. Well, you would have, but your stop right below, you would have been stopped out there, and it came back, and you go long again. Maybe say you demand to make a higher high, and you get long there. Well, you may have been stopped out again, depending how close you had to the zone. So this is an example where you might take it on the chin, being too cute, too close to this zone, right? If you have your ATRs in, you're stopping out an ATR below there. You don't feel any heat as far as the stop out, and then you catch this whopper, 50+ point move straight up. And the next example is crude. See here, swipes, stop run, sweeps, I should say. 184. I don't know if you guys have recognized this pattern, but here you go, same thing. Here's another example though. If you didn't put your stop and ATR above here, and you got on right when it broke, this is actually not a bad, where you could have been getting out of some. This is a good 25 ticks, 25 ticks. But if you sold right when it broke the zone and then put your stop right above it, well, you got stopped out right here, and then it continued lower. So, like I said, I get my stops and ATR out of there. So you have to decide what you're okay with. But like I said, if you're one of those traders that likes to re-enter a trade, you would have put it on here. You could have caught some, got out of some there, and then you get stopped out. And once it breaks the zone again, you get in again when you see the red bubbles. Then you catch the bigger move down. Another example from CL. This was pretty substantial stops here. 500 moves away. Same thing. If you got in right away, you probably were stopped out. If you're too close to the zone, you get an ATR out of there, you don't get stopped out. And you notice all of these have retested and failed. Not one of these has just been one of these moves, which you see in the Dumb and Dumber is a lot more than the stop and holds. And like I said, that's a great, to determine if it's a stop and hold, you can demand the ATR, the retest, and then that has such a high propensity, you demand that, and then you can get in, and you know exactly what it is instead of trying to guess. It moves a little bit away. You're trying to say, you're guessing right here if this is going to turn into a stop and hold, or if it's going to fail and be a Dumb and Dumber, right? So that's the issue you have if you're taking trades right away. You don't really know. Most of the times when the market get the ATR out of there, you can have much better judgment, which you're going to hear me say about 5 million times on this trading course. And that is the last example of that. So again, you can use these areas and just say you're looking at something that is a heavy resistance area. Whenever you look at, we talk about this all the time, whether it be VWAP or whatever you guys look at, that you say this is a heavy resistance area, and you see the thing blow through with stops. Well, that could just give you confidence that area, the adage is resistance is now support. So if you see it blow through with heavy volume stops, then okay, now this was resistance, say for the last couple of days. Now you play it as support, right? So you find your important areas, and then you use this information to judge, how those areas are going to react. That is the key to all of this. So that is the stop and hold. Thanks.